A surprising fact that emerged yesterday has caused a major stir in the financial world. Vanguard has become the largest shareholder of MicroStrategy, MSTR, with a staggering 20 million shares. Vanguard's massive stake sheds light on several important points. The most intriguing aspect is the stance of Vanguard's CEO and management team toward cryptocurrencies, particularly Bitcoin. Even though they do not embrace this technology, the funds they manage are effectively being pushed into the crypto world through passive investment strategies. Although Vanguard is the world's second largest asset manager, its executives have repeatedly made anti-crypto statements in the past. However, market dynamics are forcing them to enter this space. This is a concrete indication that trillions of dollars could flow into Bitcoin, XRP, and other altcoins. Ahead of us lies a liquidity tsunami that will massively drive up the prices of the entire cryptocurrency industry. Cryptocurrencies like XRP and HBAR provide incredible services for both the public and private sectors, and their potential has yet to be fully understood. MicroStrategy CEO Michael Saylor makes significant observations regarding Bitcoin's slowing growth rate. This rate, which dropped from 120% annually to 100%, then to 80%, and over the past 5 years to the 55-60% range, is a natural occurrence. According to Saylor, this slowdown stems from the law of large numbers. A 100 trillion asset cannot be expected to grow at rates like 80%. As Bitcoin integrates with capital markets, its growth becomes more challenging. Just as a $1 million company can grow faster than a $1 billion company. According to Saylor's 20-year projection, Bitcoin's annual return will drop from 55% to 20%. When compared to the S&P 500 index, which has delivered an average annual return of 10% over the past century, this 20% target remains highly ambitious. Saylor believes Bitcoin will outperform the S&P index and explains the core reasons for this. Absence of counterparty risk. Bitcoin represents a pure form of capital, free from the numerous corporate risk factors, supply chain, legal, political, physical risks, etc., associated with corporate structures. No currency exposure. While companies generate cash flows in multiple currencies, Bitcoin is immune to such currency risks. Global accessibility and leverage. Bitcoin is not subject to leverage restrictions or trading hours like traditional markets. It is accessible worldwide, 24/7, regardless of weekends or public holidays, and can be traded with leverage. According to Saylor, when these risk factors and constraints are removed, what remains is Bitcoin as pure capital. In a scenario where the S&P 500 delivers an average 12% return, Bitcoin is expected to deliver 18-20%. This implies a 6-8% premium derived from the elimination of these risk factors. Bitcoin is described as less volatile, more liquid, more functional, less risky, and as a pure, objective monetary index governed by the laws of nature. If Saylor had invested all his capital into XRP instead of Bitcoin, MicroStrategy's value today could be at least twice as high. The power laws and the growth challenges tied to large numbers that Saylor mentions suggest far greater potential for XRP compared to Bitcoin at its current market capitalization. With a market cap roughly 1/10 that of Bitcoin, XRP inherently has far more room for price appreciation under this logic. More importantly, XRP's core technology is superior to Bitcoin's in many ways. The original purpose of cryptocurrencies was to provide a decentralized alternative to existing centralized monetary systems. Bitcoin was a brilliant first step in this direction, but it falls short when it comes to programmability and building decentralized systems on top of it. Bitcoin's slowness and the limited functionality of its base layer blockchain hinder the development of layer 2 solutions. However, these problems do not apply to XRP, Solana, or Ethereum. These cryptocurrencies are far more functional and better suited for real-world applications. We can compare Bitcoin to Yahoo and XRP to Google Chrome. Today, nobody uses Yahoo because better alternatives like Chrome exist. Similarly, XRP offers a better alternative in every category. Michael Saylor recalls the core principle of John Bogle's Vanguard 500 fund. Individual decisions are less impactful than the market itself, and passive investing often outperforms active investing. Vanguard's massive passive funds illustrate how capital is being pushed into the crypto world. Bitcoin treasury companies serve as a crucial bridge in the capital markets. They create a crypto gateway for stock investors who traditionally cannot purchase commodities. For example, there is $35 trillion in discretionary capital available to stock investors. compared to only $700 billion for commodity investors. This means there is roughly 50 times more potential capital flow on the equity side. Additionally, new doors are opening for credit investors as well. The $65 trillion in credit capital offers roughly 95 times more potential compared to commodities. Passive funds allow investors locked into indexes like the S&P or NASDAQ 100, who face structural barriers preventing them from directly buying Bitcoin or other commodities, to access this capital through Bitcoin treasury companies. As a result, massive capital pools such as retirement accounts, 401ks, IRAs, etc., can indirectly participate in the cryptocurrency market. Bitcoin treasury companies act like energy absorbers, drawing capital from the market every day. With enterprise values reaching into the billions, these companies, as they become included in indexes, consistently benefit from passive capital flows. These inflows boost their premiums, enabling them to issue more stock, purchase Bitcoin, and increase their weight within the indexes. Saylor emphasizes that these companies pull capital like a magnet. In an environment where traditional banks and tech companies reduce their index weights by paying dividends and conducting share buybacks, crypto treasury companies employ the opposite strategy, attracting capital towards themselves. XRP's impact on the market today is absolutely undeniable. Bitcoin, XRP, and Ethereum. This trio is building an entirely new world for all of us. These technologies will not only transform the way we live, but also fundamentally change how businesses operate, how exchanges function, and how real-world assets are traded. I am extremely excited about this future, and believe that XRP will be at the forefront of this revolution. While I think Ethereum will continue to exist for a long time, I don't believe it will have the same level of impact as XRP or HBAR. If you enjoyed this in-depth analysis of the cryptocurrency market, please don't forget to like the video, share your thoughts with us in the comments, and subscribe to our channel to be part of this financial revolution. Your engagement strengthens this community and helps us bring this valuable information to a wider audience. See you in our next video.